What's up, everybody? How are you doing? On Sunday, May 17th, Federal Reserve Chairman Jerome Powell went on 60 Minutes to address the nation. Here is a recap of what he had to say. Powell predicts that US GDP could drop by more than 30% in the second quarter. Unemployment could hit as high as 20 to 25%, and the US could be facing the risk of low growth and stagnant economy. The recovery is going to be long and certainly not V-shaped. However, he does not believe that the US will go into depression. He encourages the government to use its fiscal tools to support households and businesses. Powell also indicates that the main reason for the bad economic data that we are getting is the social distancing measures and shutdown that the health authorities have enacted. And once these measures have worked and been rolled back, the economic data will start to improve as long as there is not a second wave of infections. However, some economic activities might not come back to its previous level until a vaccine is ready, specifically travel and entertainment, where people have to be close to each other. Powell warns that the longer the economy takes to recover, the longer people will be unemployed, and more businesses might have to go bankrupt, and that will negatively impact the economy and prolong the recovery. When Chairman Powell was asked about the possibility for the US going into depression, he mentioned that the difference between now and the 1929 depression is that the US financial system is much durable right now and is expected to withstand this downturn. When in 1929 the US financial system had failed and a lot of financial institutions went under. Also in 1929 the Fed was tightening the money supply. But now the Fed, the US government, and all governments around the world are responding by providing stimulus. So Powell does not see the US going into depression. Powell expects that the recovery will likely start in the third quarter of this year, and it could take maybe as long as to the end of next year, but it's not going to be a V-shaped recovery. Powell also praises Congress for providing stimulus very quickly, which will help keep businesses and individuals solvent and will lead to faster economic recovery. When asked about the Fed's role in the crisis, Powell said, "At the beginning of the crisis, markets stopped functioning. Investors were selling everything and flocking into short-term treasury bills. The Fed stepped up and flooded the system with liquidity to restore market function. A big difference between the Fed response in 2008 and in March of this year is that the response now is much larger and aimed towards supporting companies to prevent them from failing rather than supporting banks as in 2008. The Fed had to step up and provide credit in the system to allow companies to borrow and meet their obligations. The Fed is also lending to states and local governments to help them during this time of declining revenues." Powell emphasizes that it's not time now to worry about the US debt. The focus right now should be to keep businesses and individuals solvent, and one way to do that is for the US government to use its fiscal tools to stimulate the economy. If we do not do that, then people will be unemployed for a longer period of time and more businesses will go bankrupt. Thus, it will take the economy longer to recover. Once the economy recovers, then the US needs to get on a more sustainable path where the economy grows faster than the debt. When asked about negative interest rates, Powell said that negative interest rates are not good for the US. The Fed prefers quantitative easing. With negative rates, people get paid to borrow and get charged when depositing their money in the bank. Negative rates had mixed results wherever they were implemented. Additionally, they undermine the profitability of banks and thus might cause banks to be less inclined to lend, which could lead to weaker growth. Powell also stated that it's not up to the Fed to determine when the US economy should reopen. That is up to the federal and state governments, but it's necessary when that happens that a second wave of infections does not occur, because a second shutdown after reopening would be very damaging from a confidence perspective. Powell also mentioned that the Fed is not out of ammunition and there are a lot of things they can do, including expanding their lending programs and changing their purchase asset strategies. And he adds that the Fed is committed to supporting the economy and employment and avoiding any long-term damage to the economy. Finally, when Powell was asked about wealth inequality, his answer was that we have seen an increase in people's wages who are at the low end of spectrum, but it took a long time to materialize. The previous economic expansion was around 10 years, the longest in US history. However, the increase in wages did not happen until 8 or 9 years in the expansion. The Fed is cognizant of that and constantly debating how to make that happen faster for communities at the low end of the wage spectrum. That's all what I have for this video. I hope you found it informative. Please let me know in the comment section below your thoughts about this interview. Thanks for watching.